Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So this week was really full of the important events. The personal consumption expenditures has brought some surprises. So let's make impact on performance on the euro. The tariffs hazard across the board now treat the stability in Europe and in Japan, and I think that in Japan it's more important because, as we mentioned in today's report, a weekly report that we have prepared, that after the just rising of the inflation with the 250% debt to gross domestic product ratio, it's already big impact for the Japan economy. Then they got the trading deficit, which is just suicide for export-oriented country, which is Japan. And now they also could lose, lost actually 2% of their gross domestic product and the impact of the tariffs. So this just could destroy totally the economy. I don't know what they will do, but currently I think that Japan even is a larger risk source than the European Union to get together with the United States. So, but we're mostly standing focused to the European economy and the balance between euro and United States dollar and European Union economy and United States economy. And here, the information that we are getting shows that probably not many things will change in the nearest couple of months. Recent overall analysis by the big companies in Europe and in the United Kingdom. So personally, I have checked a recent report from the Fathom Consulting about the European economy. It suggests existence of some positive sentiment. So the euphoria around the defense spending that have been announced is not yet fade. But at the same time, if you read the report, you will see it, that in 2-3 months, closer to the end of December, or close to the end of the summer, the situation could start changing by the few reasons. First of all, the industrialization in Europe probably will fail. France has big problem with the budgets. If even Germany will borrow this money that they intend to spend on the defense, they do not have the industrial capacity to do this. So they just increase the borrowing costs, get the liquidity pumping into the economy, is the trigger and the boosting the inflation, but this will not lead to a real product in the economy, will not lead to increasing of the gross domestic product in the same degree. Third is a big problem is a rising cost of the raw materials and commodities, which will make really difficult the plans of the Europe for the industrialization. I am not speaking even about the tariffs. So if Donald Trump will be stubborn with this, so the current positive trend really could start changing in Europe. So for now, I would say so that probably the positive impulse that has been made on euro currency should stay on the market for a while. So I think that we could keep our target around 111.50, 112. This market has chances to reach it, but currently it starts looking like the current upper direction, it's still a retracement. So the long-term bearish tendency in euro currency probably should remain, and the processes that we see currently in the United States that are really strongly inflationary, which first of all triggered and increased the demand for a safe haven. So demand for the dollar probably will be higher. And second, the parity between the policy of the European Central Bank and the Fed will keep the advantage of the latter. And these things together makes me think that close the end of the summer, the tendency, this positive impulse start to fade here in the euro currency. But this will happen a bit later. So if you would like to know details, we have explained everything, why we think so, and you could, as usual, take a look on the report. Speaking about the next trading week plan, there are a few moments that we need to discuss. Let's start from the weekly chart. Here's the important thing. If you remember, we said that on the weekly chart we have the stretch pattern. Bearish stretch is combination of the overbought and fib level, and the consequences and conclusion that we have made is that it should be some reaction to the downside. Now we have this reaction, and the major question whether this reaction is over or we could get slightly deeper retracement. Strictly speaking, if we will base our analysis purely on the dynamic of the trended oscillator. Why I use today the trend oscillator? Because it shows minimum target of the stretch. For a stretch pattern, market has to reach, or better to say, oscillator has to reach the zero line. And you can see that here it still stands slightly above the zero, but it could reach it in a different ways. So it could reach it faster if your currency will show downward action, or it could reach it slower if it will spend some time just below these lows, below this top. Because for this type of the oscillator, we do not need the same direction as an oscillator coming. So it calculates a bit differently, and it just will be enough if euro will spend some time here. But at the same time, here's a very interesting moment if you take a look at this part of the chart. And here you could see absolutely the same story. Strong overbought on acceleration from the local lows. Things that we have here, absolutely the same. I don't know whether we have the pattern, the fib level here, but it's not really important. You can see that even pattern stands the same. So this some kind of a shooting star candle. These two candles in the same way. Some minor retracement and return back. Here we have the same. And take a look that the normalizing of the trend oscillator has happened on a rising market. So why it actually has happened? Just because the pace of the upward action here was slower than this one, and that lets the trend oscillator to reach the 0 point. Here it means that here it also might be the same way, although on the lower time frames we do not see yet the signs of the preparation for a rally. On the daily chart you could see that actually we see nothing new. Our engulfing pattern worked nice. Friday training plan with the intraday hand shoulders works nice. Market shows bounce from the fib level, but currently we can't say yet the discontinuation of this one. The only thing that we could add is minor harmony here with this previous retracement down. So maybe it leads with the same action to the upside, and the retracement will be harmonically to this one. So that's the only conclusion that we could make on the daily. On the hourly chart, indeed the market has completed all things that we would like to. So you could see that trend line has been broken. Market has broken through the confidence resistance. Here we have good acceleration. So chances to reach the OP around 108.50 seems really nice. So this will be our nearest target, 108.50 and 108.70. And then we will see what will happen. By the technical meaning, the CD acceleration gives good chances to possible continuation to the XOP later, which is 109 area. Next week we get the payrolls and inflation in European Union. Both indicators will be important because in April European Central Bank will take the meeting. And what inflation we get could directly impact on the decision. So stronger inflation in the European Union, for example, or softer data on the payrolls would easily let market to keep going higher. So for now, it has passed too small distance here to let us to say that we're going higher back to the top and to the next target. For now, I think that we should stay focused with our pattern that we have, keep trading it. So we have good entry, good position right now. Let's see what will happen. And let's focus on these two nearest targets. First of all, of course, for Monday and Tuesday, this one. because all other targets that we have, they stand already on the monthly chart. The next extension is leading right to the 112. So we do not have any other extensions and targets on the daily chart, for example. So these all targets from these extensions have been exceeded. This was the XOP. And if market will keep going higher, we have to switch to the higher time frames for target estimation. That's why on the beginning next week, we will stay focused on this pattern and these three targets. And depending what will happen here, actually, if market will start going to the XOP, it's already will be good sign that we're going back to the top, and maybe this will be indeed the continuation of this action. So that's what important. Also recall what we talked about this. If you remember, here was kind of the widening triangle. If you remember, some consolidation that we were watching in the beginning of the week. Now market, as you can see, returning back inside of it, and this also keeps chances for possible action back to the top. So overall context currently, I would say moderately bullish on the euro currency. Let's see whether we are correct with this or not.